This is coming from the head of the Polish National Bank, the central bank. This is from investing.com. Poland's central bank announces plans on Wednesday to increase its gold holdings to 30% of its reserve assets, aiming to strengthen the country's financial security. Glopinski says in these difficult times of global turmoil and the search for a new financial order, gold is the only safe investment for state reserves, NBP Governor Adam Glopinski said in an emailed statement. He is proposing a motion to the bank's management board about raising the reserve target for gold to 30% from their 22%. Now remember, I said I was all over this in 2023, screaming about this. Let me read to you what Adam Glopinski said in 2023. When asked why does the central bank hold gold? Because it retains its value even if someone cuts off the power to the supply of the global financial system, which is based upon electronic accounting records. Of course, we do not assume that this will happen, but as the saying goes, fortune favors the prepared, and a central bank must be prepared for the most adverse circumstances. This is why gold has a special place in our currency management process. So he's basically saying, think about everything digital. When someone cuts the power to the financial system that is all based on electric accounting records, this is why we own gold. And now he's increasing it to 30%. When you look at the most well-informed traders in the world, forget about the wealthiest, we know that. They're the most well-informed traders. They drop crumbs, they give you clues. And so when we see a head of a central bank saying we're going to increase our holdings to 30%, instead of buying more treasuries, one that is aligned with the West, because we're very concerned, and if the power gets cut off to the global financial system, well, this is why we own gold. One last point, to me, what's really interesting right now about what we're going to see tomorrow, and I'll put gold into this basket, is normally the Fed would lower rates into normally they lower rates into a weak economy. Now, I would argue that we're seeing a far weaker economy than people would agree, because many people would agree, because you know, we saw a $911,000 or $12,000 revision of jobless claims, 911,000, the largest downward revision on record, on top of 263,000 jobless claims just came out last week. This is the highest since October 2021. You add those 263 to the 911,000 largest downward revision on record, we're continuing to slide into a soft economy. But normally the Fed would cut rates when stocks are well below record highs. So you're cutting at a time when stocks are at all-time highs. Also, gold typically performs best when rates are low. So the fact that gold and silver have held up so well in what had been a rising rate environment, what happens when they acquiesce and give up and they cut? I would say that it's rocket fuel for the gold market. And this is a very interesting time. In essence, what this is going to do is it's going to benefit the upper 1%. It's not going to benefit the people. It's going to benefit the upper 1%. When they cut rates, asset prices go higher. So too does the cost of living. And the people with the assets right now, you have a period of time where the top 10% of Americans now own 93% of all the wealth. The bottom 50% of households owe 2.5% of the wealth. So history says long-term asset owners will be rewarded as rate cuts begin. This also means that the rapidly growing wealth gap will only become larger, especially as core CPI inflation, CPI inflation is back above 3% with the economy weakening. This is, recession fears heading into meeting the printing press. This is stagflation. This is something where it's going to get very, very interesting and would only make holders of our assets want to flee capital, to leave, and to go after things like gold, which I believe is just getting going regardless of its high price right now. So everyone thinks that gold is too risky because, it's up at these levels, yet it keeps on going. And this is even as the central banks continue, and the big money continue to hoard it as a tier 1 asset. When the guys running the printing presses are the biggest buyers, this isn't speculation anymore. I've been saying this forever. These are the central banks. It's a signal. And when the smartest institutional money here in the United States flips from sellers, we've been net exporters, to buyers, we are net importers, you better be paying attention. A reset is coming. Bottom line, do not trust the government data to guide your moves in precious metals. Their incentive is to mislead, not protect you. I've been saying that forever. Misdirection, right? The government numbers, the CPI, the unemployment numbers, everything, even, I mean, it's all a lie. And you can see it. The biggest deal to me above all else is that the people here, the institutional money, are taking in billions and billions and billions and billions of dollars a month worth of gold and silver. They go from seller to buyer. If you're not paying attention, you're going to miss one of the greatest wealth transfers of all time. I believe that in my soul. I truly do. And, you know, it's interesting too, as you know, the comment that we always talk about that Doug Casey made famous, that gold is the only true asset that is not someone else's liability. Well, I'd like you people to understand that on the United States government balance sheet, gold is the only asset on the federal balance sheet that is not simultaneously a liability. In other words, gold is the only true asset that the U.S. owns free and clear, and they continue to buy it, and it's going to continue to go up. And the fact that they put silver on the critical metals list or the critical minerals list, you just got a floor underneath the price of silver. The governments, but the U.S. has now put a floor under gold and silver. The days of remembering it get beaten down to levels that you can't even remember, like in 2020 when it went from 20 to 12 like that. Those days are over, and I think either people get it or they're living with a recency bias that is going to have them miss this altogether. Bloomberg confirms the London one-year implied silver lease rate blasted above 5%. Now, I'm highlighting this because number 2 on there was platinum. While on September 4th, the JBMAs, that's Japan Bullion Market Association, Bruce Ikemisu reported a London one-month lease rate rocketing to an extraordinary 6.4% over the past 2 decades. Silver lease rates have usually hovered well under 1%. The reason I say that is that Bruce came out about 2 or 3 weeks ago and said that they are trading 3 million ounces of platinum spot contracts, deliverable contracts every day in London. In other words, contracts that could be delivered. Yet he said loco, meaning location. Loco Zurich and local London, there's 0 platinum available. So when you talk about platinum being suppressed, silver being suppressed, these dum-dums, these Western banks are going to, I don't know, they're in big trouble. And part of me feels that the Trump administration understood this, and this is why all the metal has come back to the United States. In essence, maybe the first step is covering these short positions that the Western banks have before it gets transferred perhaps to the US government through some form of exchange or swap by the Exchange Stabilization Fund. I don't know exactly what's going on because we don't know exactly who's brought it back. I do believe the US government is behind it. But in essence, if you want to bring all this metal back and then create a short squeeze on the European banks, which is what Tom Luongo talks about, that Trump is out to get them because he believes that the European aristocrats are behind many of the problems in his administration. And that's his belief, and it's an interesting story. It wouldn't surprise me because the real strain and stress is in London, in platinum and in silver in particular. Not as quite as much in gold, but the vaults are stuffed here in the United States. A lot of the metal has left, but a lot of it's still in the COMEX vaults in the ecosystem, which makes me feel that there's more US government involvement than we are being led to believe. But in any case, all I can tell you is that things are getting crazy with gold, with silver, with platinum, and I think it's just beginning. And that's the part that most people probably have a hard time understanding because they've rallied so much, at least people paying attention. People in this country are completely and totally asleep, however, as it pertains to the investable public. Then to highlight the amount of inflows into the COMEX, the fact it's not being talked about and the shortages in London and the amount of central bank buying, the fact that it isn't being covered should be another crumb, another clue. All of these institutions, every single TV station, radio station, newspaper, magazine, they're all owned by 4 companies. The information is filtered down. Don't say anything, they would say. We don't want to be crowded out of our positioning. It's so contrarian to me. It's such an obvious contrarian indicator. You have to see the clues and try to have the courage to connect the dots. That's the scary part, right? You can see all the dots. Are you connecting them and being led astray or not? I choose to connect the dots and see what I think is happening. And it seems to me quite logical that this is something that's just beginning, and it's a change, a monetary change. And with the implementation of the Stablecoin Genius Act, which is far from genius, diabolical maybe, we've entered a new monetary ecosystem, and gold and silver will have, gold in particular, will have a more significant role than it has in the last almost 100 years.